market has come alive this year. It is in large part the general market excitement around AI overflowing into the copper space that has seen speculators spring into action to push the price at one point close to $11,000 per tonne. And no wonder. Official estimates published recently put new copper demand from AI at up to 2 million tonnes per annum, or almost 9% of current consumption by 2030. But those familiar with the industry have been beating the copper drum for years. In 2022, S&P Global published what may one day be regarded as seminal research, representing the first time the copper market has been thoroughly picked apart from the ground up. Before the influence of AI was considered, S&P predicted global copper demand would double over the next 12 years out to 2035 to 50 million tonnes. This increase was chiefly to feed net zero policies as the proxy for electrification. To put that in context, that's roughly the same volume of copper the world has consumed over the past 122 years. That would be the heavy lifting, followed by incremental growth out to 2050. S&P's expectations have plenty of support. The International Energy Agency and Bloomberg NEF have estimated that 120 million tonnes will be needed just to feed the world's renewable and EV sectors by 2030. This is made up of 76 million tonnes for electricity grid expansions, 24 million tonnes for wind, solar and other renewable power facilities, and some 20 million tonnes for EVs with their charging units. Added to existing uses, this would put global copper demand at around 40 million tonnes. Some of the more outrageous price forecasts coming out from the big banks just a few years back, that a copper price of around $13,000 per tonne was needed to encourage the exploration and development needed to deliver the additional tonnes just for the 2030 scenario, are starting to look conservative to many. To supply S&P's 2035 demand scenario, the industry would need to find, permit, build and expand operations equivalent to another 17 more Escondidas, the most productive copper deposit we've ever found. To quote directly from the S&P report, substitution and recycling will not be enough to meet the demands of EVs, power infrastructure and renewable generation. Unless massive new supply comes online in a timely way, the goal of net zero emissions by 2050 will be short-circuited and remain out of reach. The world today does not have the physical or administrative infrastructure in place to deliver this metal. It's no secret copper grades are declining. In the decade up to 2016, the average global copper grade fell by 25%. Today it sits at around 0.6% copper. That means for the same copper, we have to dig much, much bigger holes at a time when society has little appetite for extractive industries. The consequences of falling short on this challenge are material. Failing to mine a metal already central to industrialised life and at the core of the energy transition will likely have a destabilising effect on international security and place unprecedented strain on already stressed supply chains. This scenario can be likened to the 20th century scramble for oil, yet it could be worse because of an even higher geographic concentration of copper resources and processing infrastructure. Solutions to this problem are few and far between. Major copper miners have reserves up their sleeves, but to meet demand forecasts, the world needs discoveries. And discoveries in parts of the world where a deposit has a reasonable chance of becoming a mine. There have only been 2 greenfields deposits discovered of note in Tier 1 mining jurisdictions over the past decade. One is the Winu deposit in Western Australia that sits deep within the Rio Tinto portfolio, and the Marimaca discovery in the famous Antofagasta region of Chile, which I recently visited. I'm at Sydney International Airport waiting for a flight to Antofagasta to see Marimaca's namesake project. Hayden Locke, Chief Executive at Marimaca, was in our London studios recently talking about the project, and he reiterated the 2020 PEA results that had a $640 million MPV and an IRR of 38%, and that's at copper prices that are 10% below where they sit today. That is, of course, if the management team can actually build it. Hayden likes to describe Marimaca, the project, as the most significant copper discovery in more than 10 years. He's also taken to waxing lyrical about the exploration upside, both at Marimaca itself and then in the regional holding that the company has. And he's contagiously confident about the prospects of actually building the project. But from our perspective, they're easy claims to make from a comfy chair in London. For us, we have lingering doubts over the infrastructure that underpins that MPV number and will hopefully, for Marimaca's perspective and investors, keep capex under wraps. And then of course the permitting issue, getting a mine permitted and signed off in Latin America is notoriously difficult. So there are permitting delays and the potential for rejection. So we've had an invitation to head to site and see for ourselves. So that's exactly where I'm heading. As the great philosopher Immanuel Kant said, to be is to do. So after 3.5 years sitting on a PEA, we're heading to Chile to find out the likelihood of some actual doing. Marimaca is headquartered in Vancouver and listed in Toronto, Canada, one of the world's primary mining markets and where more than 40% of listed resources groups go to raise capital. In an industry that is frequently accused of not having the management talent to stock the number of listed equities, Marimaca has pedigree. Inviting me to site was Hayden Locke, President and Chief Executive of Marimaca, the namesake company that is in charge of developing the project. Chief Executive Locke is an Australian-born and London-based frequent flyer with a double degree in engineering and commerce with postgraduate exploration geoscience qualifications. Since 2011, he's been developing and leading ASX and LSE listed mining companies, but started in resources as an investment analyst. Locke joined the board in July 2020. The rest of the management stable has a more Chilean flavour. Vice President of Exploration, Sergio Rivera, is exploration royalty in Chile, having been involved in multiple world-class discoveries. He has 30 years of experience and joined Marimaca in 2011. The in-country managing director is Jose Antonio Moreno, who has both international and local experience, most recently with integrated chemicals giant SQM, a senior manager of business development and M&A. He came on board last year. Alexis Munoz is the most recent addition, brought in as head of project execution. He has years of big company experience with Anglo American, Glencore and BHP, and has led project work at tier 1 assets such as Monteverde and Caluesi. Nico Cookson is a capital market specialist who cut his teeth with Appian and RBC and has been head of corporate development since 2021. Solange Gonzalez came on board in February this year as company secretary and general counsel. First Quantum Chief Clive Newell is a noteworthy figure on the board. The largest holders of Marimaca paper are private equity group Greenstone Resources and integrated mining and finance group Assur International Holdings at 27 and 15% respectively. Probably more importantly, Mitsubishi last year came in as a strategic investor of 5% with the hope of securing its supply chain. Mining Journal's been tracking Marimaca for some time through the 2020 PEA, through constitutional challenges in Chile and in the build-up to the release of the DFS later this year. The project looks fantastic on paper, but in mining very few things are as simple as they may seem. So when Hayden Locke offered us the opportunity to go and look at the risks of the project on site, we had no issue adding on some frequent flyer miles and grabbing that opportunity. Hola, I'm not quite on site yet, but I have made it to sunny Santiago and it is a glorious day in what passes for autumn in this part of the world. About 23 degrees at 1:30 p.m. With just a little bit of mist hovering over the foothills to the west of the Andes behind me. Hayden's in meetings for most of this afternoon, and so we'll catch up for a chat just before dinner, and then we'll hit the Marimaca site first thing tomorrow morning, and hopefully more of this incredible weather. And I can tell you I am not missing London one little bit. Until then, I'm going to make the most of the view and some of the local refreshments. While we're waiting on Hayden, we'll take the opportunity to run through the PEA numbers from 2020. That study was based on a measured and indicated resource of almost 2 billion pounds, grading 0.45% copper, based purely on the oxide resources at Marimaca. It was speculated that could support 12 years of operations, producing close to 80 million pounds of copper per annum. A very reasonable capex figure for a copper operation of just $285 million is attributed largely to the heap leachable oxide ore, but also theoretical access to infrastructure. Expected operating costs were $1.29 per pound. Using a copper price of $3.15, that means an after-tax NPV of more than 500 million and an IRR of more than 33%, applying an 8% discount rate. The capex to NPV ratio comes back at 1.84. The DFS, as mentioned, is likely to be published in the fourth quarter, and first production, all things being equal, will be in 2028. A lot's changed since those numbers were published. Materially, a truckload of drilling has been done that's being fed into the DFS, and the copper price has moved up by 20% at the time of the site visit. When we finally caught up with Hayden, we took the opportunity to press him on the sustainability aspects of the project that will be absolutely crucial in the permitting piece, those resource upgrades that we're expecting, and then also the financing piece to get the project off the ground and built.
Right, so finally managed to track down Marimaca President Hayden Locke, who's had a very, very busy day. Firstly, Hayden, where have you been? Why have you stood me up? What have you been doing?
I don't think I stood you up. No, we've been in the office firstly for our technical and environmental committee meeting with Mitsubishi, which is our monthly sort of discussion with them about the progress of the project. It's where we debate all of the decisions that we're making and go through the timelines and all of those sorts of things. And then I've had a whole bunch of other technical meetings in the office, which are all about progressing both permitting and the definitive feasibility study.
Okay, that key meeting there, the Mitsubishi meeting, how much of an influence does that key partner have in those decisions and how you take the project forward?
Well, the way the relationship is structured, they don't have any actual decision-making power, but given their track record of investment in the copper space in Chile and in Latin America in general, and their broad technical team that they have here, we do listen to them and they give us a lot of feedback, and they're always available for us to run our thought processes by. So really it is us looking for confirmation that they agree with our strategy. And, if they disagree, then we would like to know why, because we obviously don't want to make any mistakes.
I'm quite interested in what you looked at in terms of changing various aspects of the project to achieve sustainability milestones, if that was ever in the thinking, and what the different options look like for you.
Yeah, well, it already has amazing sustainability credentials, particularly around carbon emissions per pound of copper. And yes, we are looking at potentially improving those sustainability metrics. But I think I would say, and this is what I've said to the board previously, is if it makes economic sense or it is close to being the same result as the less focused on sustainability angle, for lack of a better description, then we'll always elect to go the more sustainable route. And there are areas of improvement, definitely, but we're already in the bottom decile in terms of carbon intensity, as an example. We're already industry leading in terms of our water management. We will aim to be net zero waste, so we'll have no discharge into the surrounding environment, as all mining projects should be. So there are always things we can do, and it is a focus, but I don't see us making enormous gains from what we already have, which is a blessed project in terms of its sustainability credentials between now and when we build it. It'll be incremental, small improvements that continue to, underpin our overarching driver, which is building a mine of the future, is what we're saying internally. We want to build the mine of the future.
Okay, but the mine of the future, as you say, you're blessed. Like, you're not building anything new. You're just building the mine that makes sense. What are you doing in terms of actually driving a sustainability agenda corporately within Marimaca?
Well, we've already done it. So in terms of water management, for example, in the Antofagasta region, we have already elected that we will not use fresh water. We will not use any potable water sources. We'll use seawater in all of our processing. So that's already been locked in. That's already a decision that's been made. we will employ local. And so we have 95% of our workforce are Chilean nationals, and we will source our consumables and our local products and consumables from the region of Antofagasta, primarily Mejillones. So that's already happening as a company, and that will continue to happen where it makes sense. So really the biggest lever that we have to pull that we haven't yet pulled is further reducing our carbon intensity. And we intend to do that as part of the DFS if it makes economic sense.
One of the other things that jumped out in the PEA was that the language suggested that it was more confident than you might expect from your run-of-the-mill PEA, because a lot of the trivial work had been done. A significant amount of de-risking had been done. If so much work had been done and it's so mature, how come a PEA is released in, I think it was mid-2020, and we're sitting here in early 2024 and we're still waiting for a feasibility study? Surely most of the work had already been done.
Well, a big part of it was the expansion of the resource, which was 2021 and 2022. So we released the PEA in 2020 to understand whether this project was going to be economically viable. We had a view that it would be industry-leading capex and very manageable opex, and the PEA confirmed that it was likely to be low capex and manageable opex, which delivers an amazing result. But my message to the board was always the scale is a problem, and we need to find more material to go into that mine plan. And so 2021 and 2022 were about increasing the scale of the project, which we did very, very successfully. So we doubled the size of the resource at the Marimaca oxide project. We made 3 shallow oxide discoveries, all of which benefit the eventual feasibility study. It's unusual to go from a PEA to a feasibility study, but we did an internal pre-feasibility study, which is about trading off the site locations. One of the benefits of this project, again, is it's relatively smaller. It's not a huge underground. It's not a porphyry where there's 100 different ways to develop a project, each of which carries a different sort of risk profile. This project is relatively simple from a development perspective. There are still trade-offs to be done, but we've done those in-house, internally, without releasing to the market to get prepared for the eventual DFS. And then, of course, there's the final bit, which is the financing discussion. You know, we have had the information for a long time, but in order to go from where we are, take all of the data and deliver it in a package that is really coherent, takes quite a lot of money and effort. And the investment with Mitsubishi was really the catalyst for us to be able to take that next step.
Okay, so we will talk about the financing separately, but interested in just that resource conversation. So it's doubled. Where is it now? How much is in reserves versus resources versus measured and indicated versus inferred? And what does it look like at Marimaca, the core project? And then how is that reflected regionally?
So we have, depending on the cutoff grade, somewhere between 220 and 250 million tonnes at 0.5% copper grade. So a bit over 1 million tonnes across measured, indicated and inferred. So it's a decent scale resource. You know, obviously you like to have multi-million tonnes, but 1 million tonnes is a general threshold to get to something that is considered globally significant at the smaller end of globally significant. So it's an important resource. But it's still not considered very big, which I don't personally have a problem with. That's great. From my perspective, as a single asset company, it's financeable. It's not too big to be daunting for our financing partners, and so that's a really good position to be in. In the late 2022, the big focus was infill drilling to upgrade the resource. We don't have any reserves yet because that comes out of either a PFS or a DFS, and it requires you to have you can only declare a reserve when you're in measured and indicated resource. Yeah. And we had about 40% of our resource in inferred, and so we wanted to upgrade that resource. So a lot of the work we did in 2022, which is a big part of this delay, was infill drilling. So we've now done 145,000 metres of drilling in the main Marimaca project, which is a lot. And that has allowed us to declare a resource that has about between 80 and 90% of our resources in measured and indicated.
Okay.
So that puts us in a position to declare a decent scale reserve. So about 85 to 90% of our total resources are in M&I.
And that's what the feasibility study will be based on.
Our feasibility study will be based on the measured and indicated resource, and we'd expect a fairly high conversion of our M&I into a final reserve. Obviously, the detail comes out of the DFS, but we would expect, based on the geometry of the ore body and the results that we've had previously, the Whittle shells, a fairly high conversion of those resources into mineable reserves.
It's interesting you said there's plenty of money available. I think there'd be the majority of listed equities across the three major exchanges, which would probably argue with that statement. Is this just, without giving you a free kick, just to pop through the big sticks, is that just because of the quality of the asset? What's the market telling you at the moment in terms of money available? Is it copper? Is it just copper? Gold's at historic highs, but we see so many gold projects languishing.
Yeah, I think it's very much a copper-driven story from my perspective. So there is an elevated level of interest in copper. I think there's a general consensus that copper is, I think people are now buying the story that Robert Friedland has been pitching for 2 years, that copper is in real trouble, if you believe the demand story. Well, 15 years. That copper's in real trouble, if you believe the demand story, in terms of its ability to respond from a supply perspective. And so we're seeing an increased level of interest. Where it hasn't flowed through to is the valuations of the junior companies. And so where we believe, you would say you've never spoken to a junior company CEO who doesn't believe they're undervalued. We do have a premium valuation. We think we deserve that because of the quality of the project, but we still believe that we're undervalued relative to the amount of technical de-risking work we've done and the quality of the project and the timeline to production. And so really the question is, are you willing to dilute yourself at this price to finance exploration at Sierra de Medina, or do you try and find some other way to finance that? And that's what we're wrestling with. It's not about finding the money. I've got no doubt we'll be able to find the money. The question is, what's the best outcome for our shareholders vis-a-vis our current share price?
Yeah, great question. Yeah, it is the next question. What does your ideal financing mix look like, and how do you spread that across building a project and looking at your upside? Because you are in a privileged position. If it will take you at face value, there is plenty of money there for the project. Copper is backable for the reasons that are well known. How are you looking at your financing structure and the potential corporate avenues that you could go down at the moment if it's all on the table?
We have a great marker from Mitsubishi, one of the most respected copper investors in Latin America, who came in at $4.30 a share. With an option to increase at $5.60 a share. We're currently trading, $3.50. So, our view is if we're going to issue equity, it's got to be north of where Mitsubishi came in, because since Mitsubishi has invested, we've significantly de-risked the project further. So we're having conversations on that basis, and there's a lot of interest from people. And we're saying, well, you're not going to get into this cheaply. This is not a project. If you want cheap, you can go and find something that's not of the quality of Marimaca. So there are a lot of conversations around that. There is the ever-present discussion about, do we try and fix some of our liquidity issues by doing a raise in the market? That would require a bigger discount. That is one option. There's also royalty and streaming finance. For a project of this quality, we believe that they'd be willing to pay a premium. We have a great partnership with the Cisco royalties. We're sure that they would be interested if we were interested to further increase the royalties on our project. So like I say, there are a lot of options available to us. One of them is mathematically the best. There are other soft issues to consider in terms of the future of the company, and that's the debate that we're having now. There is a mathematically best answer in terms of dilution for our current shareholders, but there's also a market perception about how we deliver greater value in the long term.
We're going to go in depth on all this stuff tomorrow on site. Hopefully we'll get the same weather as we had today. But
chilly, mate.
It is incredible. But yeah, thanks for doing this after a long day, and look forward to seeing you on site and getting some more detail tomorrow.
Pleasure.
Cool.
Perfectamente.
All done.
And so with that, it was off for some dinner in downtown Santiago and my first pisco sour, and then an attempt to shake off the jet lag before a full day site visit. The main risks with development projects are infrastructure-related capex blowouts and permitting delays. Hayden is hoping to allay those worries by showing me firsthand a project setting that he describes as blessed. In Santiago, we're about 2.5 hours from Antofagasta in a plane, and from there it's a 30-minute to 40-minute drive to site. Antofagasta is the well-known regional hub that lends its name to one of the world's leading copper producers, with dozens of services companies and close to 400,000 mining-savvy people. The closest centre to Marimaca is the port town of Mejillones. The site is apparently exceptionally well supported with infrastructure, and so I'm heading up to see for myself tomorrow, and we'll get the chance to speak to the geological lead, the country manager, and then we'll run through that permitting piece as well.
So it's about 6:30. We're in Santiago, we're on board, and we're heading from Santiago down to Antofagasta. I'm on coffee number 2, which is absolutely essential. I couldn't deal with Hayden's winning smile at 6 a.m. without at least 2 coffees on board. And so we're all set to go. We should be in Antofagasta for about 9 and on site before 10. We're going to do all the infrastructure, the ports, the rail, everything. We're going to look at site, we're going to go through the core. We're going to have a talk about the sustainability angle as well. Hayden feels that even speaking to all the stakeholders on site, we should be done by mid-afternoon. I've not done anything that's that accessible with that kind of turnaround. He's confident as usual, so we'll be checking back in to see how we're going. But the idea is that if we can do all this, get it all in, we should have a full suite of interviews and inspections done and back in Santiago by about 7 p.m. this evening. So we're in the car at the moment. We're heading from Antofagasta Airport to the site at Marimaca. It's a sealed road all the way. Looking out the window on either side, you can see the infrastructure, you can see the power lines. To the left over here, you can see a power plant itself, or multiple power plants. And you can see Hayden doing an incredible job behind the wheel on the other side of the road for him. So far, so good.
Having made it from the comfort of the hotel in Santiago to the site road in good time, we'll need another 5 minutes to reach the site checkpoint. From there, we'll head to the meeting rooms, have a look at some core, then go up to the lookout point and take in the mineralised area of the project and get a feel for the distance to Mejillones. We'll then head down to the expected site for processing infrastructure and onto the physical delivery of water and power to site. Before heading to the coastal delivery points, we'll have a chat to Jose Antonio about the permitting process. The outcropping oxide at Marimaca was brought to Sergio's attention in 2014 and the potential was immediately obvious. Marimaca bought the property and the first holes were drilled in 2016. Most of the time you might start with 5 or 10 holes and you'd be happy to encounter mineralisation in 2 or 3. Sergio drilled 15 holes at Marimaca at 100 to 150 metre intervals and hit significant mineralisation with every single one. Subsequent deeper drilling that encountered iron-associated sulfides did 2 things. It helped Sergio with an interpretation of Marimaca as an iron oxide copper-gold deposit, or IOCG, and it defined the depth of oxidation and therefore heap leachable material at some 400 metres, compared to 150 to 200 metres more commonly found. The extent of the deposit looking to the northeast is 1,600 metres and it's 700 metres wide. Within the deposit there is mainly copper chloride in the high-grade core. There is a significant distribution of copper silicates and then copper mixed with manganese and other subsidiary elements at the borders. Marimaca has seen 2 resource updates since a PEA was published, incorporating almost 50,000 metres of additional drilling, taking the total meterage recorded at the project to almost 140,000 metres. The measured and indicated resource has subsequently more than doubled to over 200 million tonnes at 0.45% copper for 900,000 tonnes of contained copper, making it one of the biggest copper finds in a decade or more. The expectation is for a fairly high conversion into reserves for the DFS, with a logical impact on project economics. There's a further 37 million tonnes at 0.38% copper for another 141,000 tonnes of metal in inferred resources, and there is a regional play that to date Marimaca has resisted pressing too hard on. The IOCG interpretation has allowed Marimaca to define targets with similar characteristics along a regional northeast trending structure using magnetometry. The combined target resource at those properties is some 150 million tonnes at 0.2 to 0.4% copper. These are complementary to Marimaca, and some of these targets may see more drilling this year. And to be clear, this is all oxide. The nature of the mineralisation suggests the sulphide resource beneath Marimaca and subsequent deposits could match the oxide numbers. Then there's Sierra de Medina, which is 25 kilometres from Marimaca and was defined as a priority exploration target early this year. It represents a different tier of opportunity in what is potentially an emerging belt of large-scale manto-type copper deposits, similar to Antofagasta's Cacoro project or Capstone Copper's Mantos Blancos operation. The conceptual target there is several hundred million tonnes at a grade approaching 1%. But while Sierra de Medina will continue to get a relative poke, the really important thing for those interested in Marimaca and in the likelihood of the namesake project being built is how close these deposits are to available infrastructure and how supportive government and communities are to development. The development site is 10 kilometres from the nearest power station and 25 kilometres from the coastal hub of Mejillones, which is a community from which much of the workforce would come. That balance would come from Antofagasta, some 45 kilometres away. Mejillones is also the community with which Jose Antonio is actively engaged for feedback on development options to help guide permitting. Mejillones itself is home to power plants, an acid plant, a port, and touches the Pacific Ocean that will supply water, all of which we'll visit in quick succession. There is an operating camp just outside the town that Marimaca can use to house the 500 or so workers needed for the construction phase, which takes the pressure off Mejillones itself. The processing facility has been earmarked for Laguna Seca, or dry lagoon, to the east-southeast of the deposit. The area was selected for technical ease and also to limit any environmental impact. Condemnation drilling confirmed there was no risk of sterilisation for future mineable mineralisation. There are still a few points up for discussion before the DFS is finalised, but the open pit will almost certainly feed ore into a primary crusher next door, which will in turn feed secondary and third crushers before reduced material makes its way to the leaching pads. Pregnant solution is fed into the SX and then EW plants towards the far end of the valley to produce the cathode. There is some storage on site, but proximity to the port means most of this will be popped straight down to the coast. Following the infrastructure back to Mejillones Bay is the Mejillones Creek, along which power lines, a sealed road and various pipelines run. The area where I'm standing speaking to Jose Antonio is where the power lines connect to the national grid. He's earmarked both the available points that have capacity and an ideal area to build the feeding infrastructure from which dedicated power lines will follow the existing road to the site with the required 40 megawatts. It's roughly 40 minutes to the port of Mejillones, which is big enough to bring in all the kit required to build Marimaca. Antofagasta is less than an hour away, so that can be used to avoid any potential bottlenecks. As mentioned, storage of the circa 50,000 tonnes of cathode per annum will be split between site and port, which has plenty of capacity. Security of the product is still being discussed and will influence the final balance. There's a large thermal power plant at the port that uses water intake infrastructure to cool its systems. This happens in eye-watering volumes, some 15,000 litres per second in peak times. The water is then discharged back to the ocean. Marimaca will connect to the discharging system. This is crucial for a few reasons. First, it means Marimaca isn't tapping local or regional continental water supplies. Second, to build water intake infrastructure, Marimaca would need something called a maritime concession, which can take up to 4 years to be granted. Marimaca sidesteps this process. Thirdly, even if it went down that route and went for the maritime concession, local infrastructure is congested, as you can see up and down the coast, and so it would be pushed several kilometres in either direction to actually build its infrastructure. And finally, there are social benefits. The infrastructure is congested, the communities don't want more of it. It's also a fishing community, and so that hot water discharge that normally would be ejected back into the fishing waters will be moved to Marimaca's site, which the communities are pleased with. The port and surrounding infrastructure hub is also helpfully home to chemical plants that are likely to supply the mine. The heavy lifting of the permitting is happening right now, and Marimaca expected the main concession or permit to be lodged in the third quarter. Marimaca has been exploring in the region since 2016 and has 2 environmental permits under its belt already, so management is familiar with the process and is buoyed by those successes. Marimaca engaged a consortium of what country manager Jose Antonio described as Tier 1 consultants to review the process ahead of the main permits, which included analysing the specific project sensitivities and learnings from other relevant projects in the region, and that took most of last year. There are a few sensitivities around bird life, vegetation and local groundwater, but Jose Antonio described those as minor issues for which there were well-grounded management plans in place. There are 2 components to the permitting. One is an engineering component which asks for the development and mining processes to be described in detail. This part is closely linked to the DFS. The other is environmental work, which was mostly done in terms of analysis and case building last year. This year has been about preparation of the compliant documentation. Jose Antonio said the permitting was a case of when rather than if. The aspirational timeline is about a year from submission, but there is the potential that the authorities will come back and ask for more detail on any particular element. And while Marimaca is doing everything it can to avoid that scenario, it is a potential possibility. The community engagement piece centres around Mejillones. Jose Antonio was acutely aware of how important and sensitive the public consultation was and reiterated Marimaca's dedication to adhere strictly to local processes. But he seemed confident the advantages of the project around key logistics and established infrastructure would win over any potential doubters.
I'll say lucky enough because there is an operating camp here, not here inside Mejillones, but very close to Mejillones, which has capacity, right? And it has all the permitting granted. Because one of the things that troubles our mind when we were originally designing the project was, how about when we do the construction of the project, we host 500 people or so here in the Mejillones town, which is a 13,000 people town. Putting 500 workers may have an impact and people might be affected, the people from Mejillones. Alternatively, we could have built a camp in the project site, but that has certain complications of its own as well. But we found this available camp. We have good relationship with the owner. We are finalizing the commercial arrangement to secure our space there, and that is a good solution as we can get, right? Because we are close to Mejillones, but not within Mejillones. There is an operating camp that is being operated by an expert company, right? Operating a camp is not an easy thing, right? So having this operating camp being operated by an external firm, that serves well our purpose of having a project that is built under the highest standards, but also doesn't affect the community that we are, operating.
Jose Antonio said there had been no reluctance to engage directly with communities because Marimaca was committed to best practice and was proud of the contribution it plans to make to both the local economy and to the social and environmental dynamics of the region. However, he did say that they had held off having formal discussions until they had a concrete plan to take to those stakeholders. With that plan now in hand, the public consultation process was in place and would be complete before that final permit was filed with the authorities. Marimaca's been preparing for this submission for a number of years and informally working with communities ahead of this process. And so Jose Antonio was confident that most of the potential roadblocks or risks had been identified and catered for.
Through this, early field work, if you want to call it that way, is that the Mejillones, as you can see all these fishing boats again, is more looking towards the sea, right, than towards the mountains. And for them, it's very important that the bay is not contaminated or not affected because that may affect its way of living. So for us, again, our water sourcing strategy is very, I would say, is consistent with their sensitivities because we're not adding a new impact, we're not building new infrastructure at the shore, and if all it reduces some discharging of seawater at warmer temperatures into the sea. The other thing is that they have that we have heard about the sensitivities is about air pollution. You see, these factories that generate certain emissions. So the people of Mejillones is sensitive of that. But our project being in the mountains, in the coastal belt, it's not would not be sensitive to Mejillones in that regard. So I would say from the early work we have the impression that we will be well received, right? Again, I have met with the mayor of Mejillones, show her, our disposition to be open to the community and express themselves or communicate to the community what we're doing, and he was supportive of what we were doing. Having said that, obviously we need to go through that process. And,
More generally, Chile is obviously regarded as a Tier 1 mining jurisdiction with policy, governance and infrastructure that support some $44 billion in annual copper exports from 5 million tonnes of production, making it almost twice as prolific as its northern neighbour Peru, which sits in second place. The mining journal Intelligence Investment Risk Index, a jurisdiction by jurisdiction rating system based in real data, confirms Chile as the top rated South American jurisdiction with a BBB rating. Having been satisfied with the permitting piece, all that was left to do was hop back in the car and drive to Antofagasta Airport for the shuttle flight back to Santiago, which, as Hayden promised, landed before sunset. There was time for a casual dinner with Hayden before getting a cab back out to Santiago Airport and take that flight to Sydney before the flight back to soggy London. Well, I'm back in London, and when I started this, I quoted the erudite philosopher Immanuel Kant, who said, "To be is to do." Marimaca looks fantastic at face value, having an initial oxide project that is relatively straightforward and keeps the cost down is fantastic. It's a Tier 1 jurisdiction in Chile, and as part of that, the permitting looks relatively straightforward. The infrastructure is obviously fantastic as well, second to none, you might say, and that's before you get to the overall regional geology and the potential for further upside in the overall holding. But mining's tough. The old adage that a great management team can't make a poor asset valuable, but a poor management team can destroy the value of a great asset is true. So it will be up to Hayden and his team to make the most of Marimaca's gifted setting. The company and that management team have their disciples. Greenstone is a long-term backer and a high-quality backer at that, and Mitsubishi's involvement is a huge pat on the back for Team Hayden, and it's been tough to fault them up to this point. The demand and supply scenario for copper is logically incredible. It has the industry buzzing and it has the price appreciating. And in that context, Marimaca is a breathtaking opportunity. Only time will tell how much of that opportunity Hayden and his team can grab.